I think it is a sign that there's this positive risk on environment in crypto as well as stocks. And my only concern is that that's not a healthy thing. When you see a lot of junk coins out there making like 100, 200, 300% runs, that's generally not what you want to see for a healthy market. So to me, that's a sign of caution, right? It's kind of like people are dreaming and hoping that those good old days come back. But a lot of times, at least historically, that's been a fake out. The only thing I would dare say is that for me, at least, I still have a core position with my members as long on Bitcoin. But I would actually, if we get to 25, I probably unload that and I probably start looking at turning it into a short for a pullback. So on longer term, like if you ask me where Bitcoin is in 3 to 5 years from now, I think it's way higher than here. In the near term, it's not something I'm chasing. I'm much more looking to unload positions in it. It's tough. It's tough because as a trader, you have to be disciplined enough to not do anything. And most investors, right, there's this kind of like, it's almost like an addiction to always wanting to be in a trade, right? And you really have to exercise your discipline and just say, hey, listen, if there's nothing there, don't force a trade, because when you force trades, that's at least for me when I take my losses. I think it is a sign that there's this positive risk on environment in crypto as well as stocks. In fact, we've seen AMC, GameStop, like all those big stocks that pumped in 2021. They've had big runs recently. Bed Bath Beyond was another one. My only concern is that that's not a healthy thing. When you see a lot of junk coins out there making like 100, 200, 300% runs, that's generally not what you want to see for a healthy market. So to me, that's a sign of caution, right? It's kind of like people are dreaming and hoping that those good old days come back. But a lot of times, at least historically, that's been a fake out. So February 1st, next Wednesday, the Fed will release their FOMC policy rate decision. The anticipation, what the market's expecting, is a 25 basis point hike. And really, they're generally, if you look at the Fed expectations, it's one more hike after that, probably 25 basis points. And then the market is expecting them to stop hiking. And I think that's why you're seeing some of this risk on environment. It's knowing that the end is in sight for the hikes. I still think the market's misjudging it, though, because it's not just about not hiking. If we're going to stay at 5% interest rates, that's going to be problematic for assets over the longer term. So the market has to now say, okay, well, they're not hiking anymore, but when do they start to cut? And obviously we know that's going to be when the economy weakens substantially, where they'll have to react. But for me, in my longer term, and again, I basically compartmentalize different sides of my investing, right? I have my day trading, which basically pays my monthly bills. I have my swing trading that builds wealth. And then my longer term, like assets in gold, physical gold, eventually more and more in Bitcoin, that's more of an insurance policy. It's the insurance policy that if the Fed does continue to print down the line, that will protect me, right? That's going to protect my wealth. And so that's where that comes in, where it does concern me on a longer macro basis. And that's why I'll ultimately continue to accumulate Bitcoin if it comes back in, and as well as gold. I mean, it's like anytime you invest your money, if you're not taking responsibility for that investment, it's just ridiculous, right? I mean, again, you're investing your hard-earned money. You better take responsibility. You better do what you think is going to happen or what you see is going to happen versus listening to anyone, frankly, about those investments. So yeah, I agree. Nothing's guaranteed in the markets, and people need to understand that it's all a probability game. And so when I make my predictions, it's all based on probabilities, which means there's always even an 80% chance of success. That still means 2 out of every 10 times I'm wrong, or 20% of the time it's going to be wrong. It's the difference between a pro trader's mindset and a retail investor's mindset. So a retail investor will go to a trade. They'll see a trade that they like. They'll hear about it on Twitter and they'll say, okay, this is, they're going to focus on how much they're going to make. They're going to be like, oh, I'm going to make 10x. And I see this sometimes on Twitter, like even influencers saying, what's the next 10x trade? What's the next 100x trade? But the real question I ask as a pro is, when I see a good trade setup, I think first, what could I lose if it doesn't work out? How do I maneuver if it doesn't work? And you had the FTX drop here, and then this was where it just went to sleep, right? I mean, it was just no volatility. This is where you had to exercise patience because, you didn't want to be jumping long or short in here, and it was just chopping people out. But once you got this break up, it was like a melt up. We went right back to the technical. Look at where price consolidated, right? Where it couldn't break through initially, that FTX high. And then it finally did. And we're actually starting to consolidate again. So at least in the near term, there is a chance that we could go up to 25,000 on Bitcoin here before running into some major resistance. The only thing I would dare say is that for me, at least, I still have a core position with my members as long on Bitcoin. But I would actually, if we get to 25, I probably unload that and I probably start looking at turning it into a short for a pullback. In the Bitcoin market right now are not the telltale signs that a bottom is in. For instance, exuberance, like irrational exuberance, people just getting so crazed about Bitcoin when it's only moved up. And again, you could say from the lows, it's moved up, what, 50%, but really, in the scheme of zooming out on the chart, I mean, it is still way down here, but bullish sentiment is scary. It's almost as if we were all the way back to the highs from what I'm seeing on Twitter, at least. So that concerns me a little bit. One of the keynotes of a bear market really being bottomed out is that the first 20, 30, 40, 50% up, people are so skeptical and scared that they're not believing it yet. In this case, we're not seeing that. We're seeing all this bullish sentiment come back in so quickly, and it does make me a little bit nervous that that's happening. The S&P 500, the low pivot on the S&P was in October, right? So, and you've seen generally a trend up from here. And if we go to Bitcoin, Bitcoin's low was kind of right over there too, right at the beginning of November. So you can see that there is a correlation, which does make sense because we know that when the stock market topped out, crypto topped out as well. So it's a risk on, risk off environment. Right now we have a risk on environment. So people are willing to put more money to work in the markets thinking the lows are in. But it just be aware that if the NASDAQ and the S&P really start to tumble back down, it probably would be tough for crypto to withstand that sell pressure. Is that Litecoin started to rip higher and then a lot of the other cryptos did follow suit. So in that same vein, and again, I don't know if this is something we really want to trust, but if Litecoin started to roll over, do we then say, okay, let's be careful? Maybe the rest, like, is it becoming a leading indicator? Which again, I don't know. I mean, that's a really tough thing to think about. Is Litecoin all of a sudden the leading indicator for all of crypto? But it would be something that I would just pay attention to, right? Does Litecoin kind of roll over? Does then the rest of crypto roll over? A lot of indicators can become very confusing for investors and traders. I love trend lines, and I really believe that like a candle formation, it speaks for itself. It tells you a story. And so, you know, you can look at different charts and based on just the candle formations and how the candle forms in trend lines, you can find out almost anything you want about the probabilities of the next move. And then obviously I flip in a little Fibonacci. I'm a big fan of Fibonacci and a few other things as well. But yeah, I don't use a lot of indicators because I think, again, it can become very confusing for investors. Yeah, so I think the biggest thing is just to remember not to chase, right? The more hype you see on Twitter, the more, you know, when you see Bitcoin trending and stuff like that, it's going to naturally create an emotional trigger within you that's going to be like, oh my gosh, I'm missing out. I got to jump in here. But really what you want to do is look at the chart. And if the chart has rallied, in this case, from 16 to 22,000, even topping out above 23,000, you need to be able to say, listen, if I was going to the mall today and last week these jeans were on sale at $100, now they're $1,000 jeans, would I be saying, hey, I got to buy these $1,000 jeans? You'd say, no, I'm going to wait for it to come back down, the price to come back down. You need to treat investments the same way. Buy them when they're down into support, when they're on sale, essentially. And I think that's one of the biggest issues that people have. Is that people aren't treating it like going to the supermarket and looking for what's on sale. They treat it like, for some reason, oh, I got to chase this even though it's up 3x or 4x from the lows. So longer term, like if you ask me where Bitcoin is in 3 to 5 years from now, I think it's way higher than here. In the near term, it's not something I'm chasing. I'm much more looking to unload positions in it and kind of look for pullbacks to buy or even new lows. So again, I just use that mentality. And again, listen, maybe we don't get new lows, but ultimately, you know, you want to be ready. Like I wouldn't want to see someone putting all their money to work now at 22,700 where it is. And then all of a sudden price comes back to 19 or 18 or 17. And they're like, oh crap, I put all my money there to work. Now I can't, you know, buy any dollar cost averaging. Instead, if you're really intent on buying, okay, but use a small amount. This way you have maneuverability to kind of buy on a dip. It has had a monster move up, right? Amazing move. I actually unloaded it because you're starting to get into some resistance over here. And I actually think that the dollar is starting to hit support or getting very close to support. So for me anyways, I'm going to look to buy gold. So my midterm outlook on gold remains ridiculously rosy. I still think we're going to make new all-time highs this year. We're actually not that far away. Here's your all-time high level up here. But at least for a short-term move, this is overbought now. And so for me, it's like, does it pull back to like this level right here, maybe down to here? At that point, I would start to kind of keep an eye on it and look to rebuy at those points. All right. So for me, I love gold midterm. I just think it's a little bit overbought right now. I wouldn't recommend buyers jumping in now. Wait for it to pull back a little bit, maybe 1850, give or take. And then that's where you start to reallocate some funds to.